Good evening and welcome to the Money Show. I'm Kavita Thapliyal and this show is your trusted destination for investor, education, financial awareness and smarter money decisions. And in today's fast-changing world, managing money is no longer optional, it is essential. From rising expenses and changing lifestyles to market volatility and digital investing, every individual today faces one important question. How do I make my money work smarter for my future? And that is exactly what this show is here to help you understand. And I'm Kavita Thapliyal, and today a very special segment on senior citizens. That's right. We are talking about money that belongs to families but may never reach them. Across India, unclaimed deposits and investments worth thousands of crores are sitting idle in banks, insurance policies, mutual funds, EPF accounts and shares. In many cases, the problem is not lack of savings, it's lack of nomination. A missing nominee, an outdated nominee, or simply the assumption that my family will figure it out. But when a loved one passes away, financial confusion can quickly turn into emotional and legal stress. Families are forced to run from banks to brokers to insurers, often without the right documents, access, or awareness, which is why today's episode is especially important for senior citizens and their families because nomination is one of the simplest financial steps and yet one of the most ignored. On this special edition of the Money Show, we'll break down everything you need to know. How to add a nominee, how to change one, what happens if there is no nominee at all, whether nominees become legal owners, and the critical checklist every family should keep ready. Remember, building wealth is important, but ensuring your family can actually access it is just as important. So let's begin. Joining me on the show today is Samir Shah. Samir, hi, evening and welcome to the show. And let me just ask you a very basic question. Why is nomination such an important part of financial planning, especially for the seniors and the seniors watching the show?
Good evening, Kavita ji. Thank you so much for inviting me on your show. So, you have raised a very valid question. Say, before I begin why nomination is important, let me just give you one figure. Over 1 lakh crore today is lying in unclaimed account of Indian banks and mutual fund. Why? So, first question is like, no, why we are saving? We are saving our money for securing our future as well as our loved one's future. So when they are not aware about where their investments are, even though they are aware about the investments, but in case of uncertain, unpleasant movement, like no, they don't know how to claim the money. And when they are approaching to the institution for claiming money, when they found that nomination is not there, they have to go through with a lot of legal and complicated work, and it is very time consuming as well as expensive. So, nomination is very critical and important because, in case something happens to the main holder in that situation, uh, the person, as such, like no, he's going through with uh, very emotional movements, and side by side, they are needing, like no, they have to go through with the legal as well as the documentation pain. So both way, like no, it impacts a lot on the person who left behind.
Uh, Samir, now we often hear about huge amounts of unclaimed money in India. How big is this issue really? And what are the biggest reasons families fail to claim investments across investments and products, if I just have to know?
So, Kavita ji, if I'll talk about the financial sector, mutual fund, bank deposit, insurance, these are the three major sectors where we have seen the maximum amount of unclaimed money. Just because first is we have seen most of the time people are not aware about where they have made the investment. Even though they are aware about it, they are not aware about, like no, see, they have not been taught how to claim the money, particularly in when it comes to the senior citizen. They have either not talked about where they have invested their money, and post that, like no, say, while making investment, often we have seen that people have ignored, or they just because of a bit of, like no, writing name, contact number, and all. To avoid that thing, they have not nominate any person while making investment. And trust me, what we have seen is there are a couple of myths. First is people feel if they nominate, they become the owner of the property, whereas nominee is nothing but he is a trustee of the wealth or the investment, and his job and their job is to receive the asset from the financial institution so that he can pass it to the family member or the legal person who is as per the will they wanted to, if they wanted to distribute the money, he can do the distribution. Nominee is not the owner. So first we have to make it clear, if somebody is nominating someone, he will not become the owner of the property once he pass away. He is the only trustee. So that doubt somewhere we need to clear.
All right. So, you know what? Many people believe that once the nominee, once they nominate someone, the nominee automatically becomes the owner of the asset. You've cleared the thing about it. But then what if someone passes away without adding a nominee to their bank account, mutual fund, insurance policy, or their investment instrument?
So, very valid question. Say, I'll break it institution wise. Say,
Sure.
suppose uh, a person who passed away and he has some bank account, right? First of all, a person has to the nominee, not nominee, the legal owner of that asset. He has to first go to the court and take the cessation certificate. It is very time consuming, costly process, right? And he has to go through with that. He has to this is not a simple process. Once you approach the court and you will get the certificate, cessation certificate, it requires a lot of time and efforts. So that is the first thing. Once they have got it, then they have to approach to the different institution, and they have to claim, say if they are going to the bank, they'll take all the information and propose that they'll take 15 to generally 15 days to 30 days time to release the fund. So this is very time consuming and time consuming and cumbersome process, and very expensive also. So I by adding only one name, uh, you can make your loved one life very easy. Just you have to write his name. Even SEBI, if we talk about RBI, SEBI, or any regulatory authority, they have made very simple. They want only name and the relationship. They don't ask for phone number and email address or no other information. So this is the thing. By adding one simple name, that they can pass the wealth pretty easily.
Right. Is the nomination process different across bank accounts, insurance, mutual funds, demat accounts, and EPF accounts?
Yeah.
Okay.
Say if we talk about a bank account, nowadays a lot of post digitalization, things become pretty easy. But there are two ways. Either a person can approach the bank, take a form, and fill up the form, or log into net banking, and there they have a dedicated section from where he can update or add nominee. Second is mutual fund. Again, mutual fund, there are they can do it through asset managed AMC site, or they can go to the registrar portal like CAMS or Carvi, and they can do it. Or they have no, if they cannot do digitally, in that situation they can ask for form, and they have to just simple fill up a form. For insurance, it is very simple. No, while purchasing, they generally ask for the information. If you have forgot that, the process is simple. If you are tech savvy, log into the insurance insurance company website. They have a dedicated section for add nominee. You can do it, or you can ask your agent to give a form, which you can fill it up and submit it to the organization.
All this can done be online as well.
Yeah, online is there as such.
Okay. Also, is there a deadline within which you have to nominate a nominee or you have to give the name?
Say, Kavita ji, earlier, say the person who was invested in past, right? There were that point in time it was not compulsory, but now these days, if you're opening a demat account, making your investment or doing any financial investment, at that point in time, it is mandatory to either you have to add the nominee or you have to click the opt-out one. So that is mandatory nowadays. But previous, like if you have done investment in past, you can do it any point in time, right? Say suppose you have made investment 10 years back, you have added some nominee. With now, if you wanted to change, you can do it pretty easily. If you wanted to, if you have not added, simple. The way I explain the process: if you have invested in mutual fund, go to your mutual fund website, like no, the company's website. There you can add the nominee, or you can visit CAMS or Carvi portal. There also you get the option of adding nominee. So the process become very simple. And nowadays, if you're tech savvy, you don't have to go out of your home. You can do it sitting at right at the dining room hall of your home.
Okay. If someone wants to change their nominee after marriage, after death of a spouse, or maybe due to family changes, how easy is this process now?
Kavita ji, the process become very easy and simple. Say suppose you have added nominee, like no, the process of adding nominee, similar process you can use for changing nominee. Say suppose you before marriage you have added your mother. Now you wanted to replace your mother, or you wanted to add one your wife as an additional nominee. You can do that. Earlier, the cap was only a person can add four nominee. Now, regulatory, say like for demat account and other SEBI and mandated, they can like now add as many as 10 nominee. So the process become very simple. Even if you wanted to allocate the amount, say suppose 33%, if you have added 3%, you can add similar contribution or a similar contribution.
Should people inform family members about investments separately, even if nominations are done in place?
Kavita ji, this is very important thing. Say there are two reasons why a lot of money are unclaimed. First is nomination, because the nomination, if nominee is not there, they have to follow a long legal process. And sometimes even nomination is there, but they are not aware about where the money is invested in that situation. After certain debt, I've seen many cases where like no husband is like no all of a sudden, just because he passed away and wife was not aware about where he has made any investment. In that situation also, money like no a lot of money lying in the banks and mutual fund company as a unclaimed money.
One very important question, because a lot of people are not sure about whom to nominate as a nominee. So, can people have multiple nominees? Is that allowed? The right division of percentage or maybe the allocation. How important is that? And on what basis should you be going in for it?
So, Kavita ji, first of all, like no, the way I explained, nominee is not the owner of the asset. He is playing a trustee or a legal custodian role, right? If you are adding if you are adding one nominee or five nominee, if you have drafted a proper will, right? In that situation, nominee, the role of nominee is to just like no a courier boy, like no generally when somebody is buying something from the online site, right? A courier person, he is carrying that parcel from the shopkeeper to the actual buyer, right? This is the role, and that exactly the nominal role is that once the parcel is received by the owner, then it is his discretion, like no as per the will. If he wanted to, like no, as if he has drafted a proper will, in that situation, the amount will get distributed according to the will. So it is very simple. There is no need, like no, you can bifurcate actual. Say suppose you have invested X amount, right? It is not necessary your mother. You should identify 50% should go to your mother, 25% go to your son, or 25% go to daughter. It is not needed, because if you have drafted a proper will, he is just a trustee. Once he get the money, he can equally distribute amongst as per the will.
That's right. All right. Is nomination enough, or should people also have a will alongside nominations?
Kavita ji, nomination is not enough. Person should have a proper will, so future dispute can be avoided. Otherwise, nomination, say suppose in nuclear family, right, nomination will suffice. Say suppose if he wanted to pass the entire, say generally we have seen they nominate father or daughter, or maybe some in some situation wife. So they, like, what they feel is they are passing that wealth to that particular nominee. But in case if somebody claims that money, as per, like, if proper will is not drafted in that situation, if a person is having a two son, they have right to, like, claim the property, and eventually it get distributed equally. If in case in absence of will, there are possibility legal battle may happen. So to avoid all the future confusion, person should have nominee as well as properly crafted will.
All right. One last question. For everyone watching the show today, just one action item from this discussion. What should they do immediately after watching this show, Samir?
Kavita ji, a small piece of recommendation from our side to all the viewers: go, first thing they should do is, like, whatever investment they have made, go and check whether proper nomination is done or not. In case if somebody in some investment, if they have missed, it is it is the immediate action which they need to do is add the nominee. And second is, like, draft a proper will to avoid future confusion between the family members.
All right, I think that will be all. Every aspect of having the nominations right has been discussed. And for all the senior citizens who are watching the show, in case you want to send across any questions on the same line, you can WhatsApp us your queries, and we will help you sort out your financial life or your investment strategies. But then, Samir, let's move on and let's start taking our viewer queries. Let's take Sandeepan's question. He's from Mumbai, 57 years old, and he wants to park almost, he has parked 2.5 CR in the funds, and he will be starting investing from 2029, I guess. ICICI Pro Equity and Debt 50 lakhs, HDFC Balance Advantage 50 lakhs, SBI Balance Advantage the same amount, DSP and Kotak Multi Asset, and PPF has got some money in 50 lakhs, he's saying. SIP is in SBI Contra, Kotak Mid Cap, Nippon Small Cap, PPF, HDFC Balance Advantage. He wants to do an SWP from 2029 onwards. Okay, sorry, my bad. So the investment is already going on. SWP is from 2029. And so it's almost 1.25 lakh against 2.5 CR for 10 years. Okay, interesting question, and congratulations. I think you've laid it out really well. We still don't know since how long he's investing, so that we could, we could have done like a back calculation. But having said that, is 1.25 possible?
Kavita ji, Mr. Sandeepan has planned his investment really well. If we talk about the fund which he has selected, all the funds are lying into balance or balance category, right? Hybrid equity, hybrid category, where, like, majority of investment is in equity, 65% more than 65% into equity. So he'll get the tax benefit of the equity funds, right? Like equity fund. Now, when it comes to the plan which he has laid for himself, that is 1.25 lakh from 2.5 crore of investment. Say, if we talk about the idle withdrawal amount is 6%. If we consider 2.5 crore, 6% is which will comes to around 15 lakh rupees. So, which is very well. Like, generally balance. If we talk about the balance fund or hybrid fund investment, they'll fetch around 10% return. And if a person is withdrawing, Sandeepan is planning to withdraw only 6% of from his investment. So he can easily withdraw 1.25 lakh for 1.25 lakh per month for another 10 years, and even after 10 years, the final, like, the remaining corpus will be around 4 crore. So very well planned, and he is very well on track. And I'm sure whatever he has planned for himself, he'll be able to achieve that.
All right.